Welcome back, man. Hey, you here with yours truly, the one and only. Really, Gemz, and you back on Golden Gems Media. Yes, welcome back, my beautiful people. Welcome back. I missed you. I got a question for you, though. Did you miss me? Hey, we got a lot to get into today. We got a lot to get into, and yes, we're going to be talking about real estate. Yes, we're going to be talking about stocks, and yes, we will be talking dang near about sports. We're going to be talking just a little bit about everything. I'm not gonna lie to you. Just a little bit about everything. We're gonna get into it all and hearing more. But before we get started, you know what we gotta do. Run the intro.
Hey, we live now, really.
Hold on. Whoa. Wait. You live? We live? Can you see me? Hey, what's up? Hey, and we back. But yeah. Before we get started, you know the one thing you gotta do for me. You know the one thing you gotta do for me, pretty please, with a cherry on top. Please do me this one favor. Please make sure you send this to your mama, your daddy, your best friend of another friend, lit Johnny, lit Timmy, or lit Susie too. Don't forget about her. You know she need these gems. All right, and you know lit Josh just moved down the street from her, and potentially he can use some of these gems too. All right, so don't be selfish. All right, hey, we talked about that. All right, you can't keep all these gems to yourself. All right, make sure you send these gems to everybody you know. All right, but hey, I appreciate you in advance. And if you're ready to learn a little bit more about stocks, if you're ready to learn a little bit more about real estate, and if you're ready to learn a little bit more just about building generational wealth or building wealth in general, we gonna get into it all today. I promise you we will. All right, I got a couple clips loaded and we're gonna get to it. I got a couple things that I really want to talk about with you, and I got a couple things that I really want to get into with you. You understand me? So hey, at the end of the day, you'll know we're gonna talk about it all. We're gonna get into it all. And before we get started, make sure you subscribe, make sure you hit that like button, make sure you hit that bell button so that way you know when we hopping on here. All right. And then make sure you hit those comments too. All right. I appreciate you in advance. But yeah, before we get started, man, how you doing? I have a good day. Earlier we was getting it on and popping. Earlier today we was getting it in a little bit. We was getting it in. We was talking about my guy, Shador Sanders, Mr. Sanders. Yes, we was talking about him, and how he's doing. Him on the grind, him getting to the money, him getting to the bag. So yes, we were talking about my guy, Shador Sanders earlier. But tonight, we might still talk about Shador Sanders potentially if you stay tuned. We might get to him at the end of this video, or we might just save it for tomorrow. Tomorrow, hey, day 9 of camp, we're going to have to get into it. But tonight specifically, it's been long overdue. All right, we got Stock Wednesday / Stock Thursday talk. And tonight, we also talking about real estate. All right, so to start off with, I'm going to play 2 different videos for you. And that's basically going to set up, I want to say, the direction for what we're going to go with this video today. All right, I'm going to show you a video of Warren Buffett talking about how he thinks investing in stocks is better than investing in real estate. And then I'm going to show you another video where another guy is talking about how he believes investing in real estate is better than investing in stocks. All right, and then we're going to talk about both of them because in my honest opinion, I think you should do both. I think you should, if you got the money, invest in real estate. And if you got the money, or if you don't got the money, you need to still invest in stocks, or at least be in a Roth IRA, 401k, things like that. We're going to talk about it all. All right, we're going to talk about it. But before we get started, all right, you got your popcorn ready. You got your chips. You got your little snack. You got a little drink or something. All right, because like I said, we're going to be getting into it all, and we're going to be talking about it all. So, hey, I appreciate you in advance. I'm grateful for you. All right. This video is long overdue. It's long overdue. Okay. I've been playing. Yes. I can admit it. I've been playing. And I know y'all been wanting me to get to the real estate talk, the generational wealth talk, and building money for yourself by making the proper investments. And I'm here to tell you that you can obtain anything that you want. The wealth that you want to obtain, I promise you. Hey, I'm going to go ahead and give you a couple of gems on how to do that. You understand me? So without further ado, let me stop talking Let me be quiet. And we're going to get into what Warren Buffett has to say. I'm going to interject potentially, but I might just let the whole video play so that way you can hear him. But this is Warren Buffett and his take on real estate, on if he believes either people should invest more in real estate or people should go ahead and invest more in stocks. All right, you can hear Warren Buffett talk about it. All right, so stocks. That conversation's up first. Let's get into it. Warren Buffett, what you got to say, my guy? Come to the front of the podium and come into the front of the congregation. Thank you.
Well, in respect to real estate, it's so much harder than stocks in terms of negotiation of deals, time spent, the involvement of multiple parties in the ownership. Usually when real estate gets in trouble, so you find out you're dealing with more than the equity holder. But there have been times when...
And once again, real quick, my bad. I didn't mean to interject that quick. But this is Warren Buffett. So if you don't know who Warren Buffett is, just pull out your Google. You just go ahead, type on Google Warren Buffett. All right, he's one of the wealthiest men in the world. One of the wealthiest men in the entire world. And this is him. Yes, he's old. Yes, we can barely hear him. Yes. But that's why you got me here, because I'm going to be breaking it down. You understand me? So be patient. All right, but we're going to get into it. All right, Warren, go ahead, continue.
Large amounts of real estate have changed hands at bargain prices, but usually stocks were cheaper, but they were a lot easier to do. So Charlie did more real estate. Charlie enjoyed real estate transactions 5 years of his life. Interesting game to him. But I think if you'd asked him to make a choice when he was 21, he had to either be in stocks exclusively the rest of his life or real estate the rest of his life, he would have chosen stocks in a second.
So he's talking about one of his friends who passed away, who was a heavy investor with him. He said that basically, if you were to ask him whether you will rather be in stocks or real estate, obviously he probably would pick stocks. And you got to understand this: Warren Buffett, with him talking about stocks in general, he's a little biased. You got to understand, this man has been investing in stocks for more years than I've been alive. Period. So he's definitely biased, but that's okay because we appreciate your opinion regardless, Warren. But let's continue to get into
it. There's just so much more opportunity, at least in the United States. There's so much more opportunity that presents itself in the security market than it does in real estate. And in real estate, you're usually dealing with a single owner or a family that owns maybe a large property they've had a long time. Maybe they borrowed too much money.
So one of the points that he's getting to, one of the main points, my bad. I know y'all said just let him talk, but hey, it'd be like that. But with Warren Buffett, the main point that he's trying to make is, at the end of the day, when it comes down to real estate in general, real estate is usually not just investing and putting your money where you own it. Real estate involves typically you talking and negotiating with another party. And with you having to talk and negotiate with another party, Warren Buffett says that's probably one of the toughest parts, because the negotiation in real estate, sometimes it never stops. You're negotiating for the price. You're negotiating once again for the price. And then you're negotiating, say, after the inspection, you're negotiating with your lawyer. You're negotiating with the realtor. You're negotiating the price. Like, you always dang to negotiate. And Warren's saying, hey, I would rather just put my money in the market and just watch it grow than, just have a negotiate and have them work with people. I get you, Warren. We respect it.
Money against them. Maybe the population trends are against them, but to them it's an enormous decision. When you walk down to the New York Stock Exchange, you can do billions of dollars worth of business totally anonymous, and you can do it in 5 minutes, and the trades are complete when they're complete. In real estate, when you make a big deal with a distressed lender, when you sign the deal, then you go into another phase. I mean, then people start negotiating more things, and it's a whole different game, and a different type of person, to some extent, enjoys the game. We did a few real estate deals that came our way in 2008 and 2009, but the amount of time that they would take us compared to doing something intelligent and probably better. And securities, there was just no comparison. I mean, in a real estate deal, every sentence is as important to the person, and in stocks, If somebody needs to sell 20,000 shares of Berkshire or something and they call us and the price is right, it's done in 5 seconds. And it closes all the time.
That's true. So what he's talking about and what he's getting at, sometimes in real estate, you can have a deal on the table and potentially you can't close it. You can have a deal that's ready to be done and potentially it goes through the cracks. He's basically saying with the stock market, if you got the money, you can play. You got money, you can play all day long, whenever you want. But in real estate, if you don't got the money, or say if you are not too privy to wanting to negotiate and wanting to talk to other people, then it's a lot more processes that come with investing in real estate. But I'm going to show you a different video that has a different perspective and that has a younger person. This person's name, all you got to do, search up Paul. You'll recognize his face potentially if you know anything about real estate. But if you don't, just do your research. You'll be all right. But my guy, he's going to come in here. He's going to talk about why he believes investing in real estate is more important. And I'm showing you both these videos. I'm showing you Warren Buffett. All right, and now I'm showing you my guy, Paul. And I'm having you look at these two different opinions because you will understand that when it comes to either investing in stocks or when it comes to investing in real estate, that decision is typically and honestly, it is up to you. Where do you want to put your money? Where do you think your investment can grow the most? And what do you prefer? Do you prefer potentially just putting your money in one place and letting that money potentially just grow over time and you not having to do anything? Or with real estate, potentially there's a lot more investments that come, say, potentially than it goes to with just putting the money down on a house. Potentially you got to do rehab on a house. Not only do you have to do rehab, you have to potentially find a renter to get into the house, or depending on, it's a lot of moving factors definitely in real estate. But we're going to talk about why I believe real estate is like gold and why you should potentially be investing in not only real estate, but also in stocks. But hitting on real estate real quick, my guy, Paul, talk to me.
Paul, would you rather own real estate or stocks for the next 10 years if you could pick just one?
Real estate. I think stocks are overpriced. They're going to give you bad returns, and real estate tends to go up over time. I believe inflation is going to be constant for the next 10 years. What level, I don't know, but real estate's a good hedge. But again, you have to pay the right price. And I'm buying real estate. I've bought several properties in the last 1 year. I have a current cash crunch right now personally because I've bought so much real estate in cash, trying to get deals done and outbid other people without paying too much more. By the way, if you told me, Paul, you can only invest in one thing for the next 40 years, what would it be? It'd be real estate.
And once again, real quick, let me interject. Guys, these are the opinions. All right, just like it's going to be my opinion and my honest take. Do what you want. Do what feels better to you. Do what you feel like you should do based on your research and the knowledge that you know about both the stock market and both real estate. We're comparing the two today because I'd really want you to take a deeper dive into how you should grow your money and how you should go about it by potentially doing your research and picking a lane that's perfect for you, or picking both lanes. Me personally, I'm in both lanes, and I will explain why later on in this video. But let's continue.
Because real estate just, when I hear people on the internet say, well, real estate goes up in value 3.5%, 4% a year, and stocks have gone up 7 or 8% a year.
So what he said there was key.
Well, real estate goes up in value.
Real estate every single year. If you haven't been privy to this information, real estate goes up every year, 3.5 to dang near 4% every year. Sometimes, and if I'm being honest, it's more than that. So real estate goes up 3.5 to 4% every single year. That means it increases in value just by obviously just being there. Stocks, on the other hand, they grow at about 7 to 8% per year. So people will look at that, oh, well, you know, in real estate, it doesn't grow that fast. It doesn't grow as quickly as stocks. Stocks grow, I'm seeing 7 to 8%, sometimes 10% every single year. Well, I get that. But with real estate, it's a little different. I'm going to let them explain.
You 3.5%, 4% a year, and stocks have gone up 7 or 8% a year. I'm like, you're stupid. And you're just stupid. That's what you look at. They're right, but they're wrong. Well, first off, real estate's gone up in value much more than 3.5%, 4% a year. But you can use leverage with real estate. Real estate pays you income to justify the leverage. There's so many other major tax benefits from real estate. You know, a bad real estate deal is better than a good stock market deal. I tell people, if you buy the right real estate deal, and even if it doesn't work out well for you, you're still going to make 11 to 13% returns. If you can have a track record over a 40-year period of 11 to 13% stocks, you're going to be one of the best investors ever.
So, with that being said, what the two opinions are just that, opinions. You should always lean onto your own understanding and do your own research when it comes to potentially investing in either one or the other. Today, to start off with, specifically, we're going to start off with talking about stocks. All right. I broke down the stock market and how you should view it and what a stock is, what a dividend is, and all that in an earlier video. If you haven't seen that video, go find it on hey, through the catalog. I promise you, you will learn a lot of information if you don't know about stocks and what they are. But when it comes to stocks, y'all, stocks, just like real estate, I believe and I see them both as long-term investments. And I believe that whether you invest in stocks or whether you invest in real estate, regardless, that is a long-term investment. If you look to see getting that money back in maybe a year, 2 years, 3, no, you're doing the wrong thing. In real estate, potentially, yes, you can see a nice little return. In stocks, yes, potentially you can see a nice little return, depending on how much value and how much money you're throwing into that specific stock or how much value you're throwing into that specific, I want to say, ordeal. All right. But really, it comes down to this, y'all. It comes down to this. What do you want to do ultimately with your money? Do you want to watch it grow? Do you want to just let it sit and then just buy more of that one said thing, which typically goes within the stock market, and that's how it works? Or would you potentially rather maybe make a real estate investment, put your money into maybe a property, put somebody potentially in it, maybe you're fixing that property up to potentially get it ready so that way you can sell it? It's multiple things and multiple avenues and multiple ways that you can look at both of these things. And it's up to you to kind of distinguish which way that you want to invest. So, with that being said, all right, we're going to get into breaking both of them down a little bit more. But first, I want to talk about a stock that we talked about the other day because my guy on Earn Your Leisure, they hit on it. All right, they hit on it, and it's that stock NVIDIA. NVIDIA, I told y'all about NVIDIA the other day, and he's going to tell you why he's bullish on NVIDIA. And eventually, towards the end of this video, I'm going to continue to break down the two different stocks and how you should view it. But he's going to talk about NVIDIA real quick because NVIDIA was one of the stocks that we talked about in the first stock video that we ever had on here. NVIDIA was one of those stocks, and I told you, NVIDIA, if you don't remember what NVIDIA is, all right, let me go ahead and break it down to you. So before he talks about NVIDIA, if you don't know what NVIDIA is, all right, NVIDIA is ultimately a tech company. NVIDIA engages in design and manufactures of computer graphics processors, chips, and related multimedia softwares, basically. It operates through, like, I want to say GPUs, all right, and compute networking and graphics segments and sectors. So basically, it's like for GPUs, for gaming PCs, and all that funny stuff. All right. And then, of course, streaming platforms and other infrastructure just like that. So NVIDIA essentially is one big corporation, and I will just let him talk about it. Go ahead, my guy.
I'm super bullish on NVIDIA. We actually are in a chat where I'm saying right now, if you look at from a technical standpoint, from a 100-day moving average, from a 72-day moving average, 200, NVIDIA has actually crossed all those in the past couple of days. If anybody's been watching, right? Like I think that 400 sitting at like 192. Today it got to 207, which was a key number to get over. I think that was it's a 20-day. After it crosses that hurdle, right?
Mm-hmm.
The next stop is now going to retest its all-time highs up at 236, which is a nice runway, right? We got 3 or 4 weeks before they report, their quarter's earnings. And the reason why we love NVIDIA is because we can see what has happened prior to it. And they get to set the tone to say, all right, look, demand hasn't changed. Look, we're still selling out. Here's our future guidance. Here's what we're doing in terms of Vera Rubin, right? Here's our next generation of GPU. Here's our next partner. Here's who we're also investing in. They're going to have all that at the end of the month. I love it right now, right? Like I've been trying to just stack calls on it. I see NVIDIA crossing the 250 to 260 mark by the end of the year. That's my outlook for it. And
so with his outlook being on that with NVIDIA, once again, if you don't know about the stock NVIDIA, all right, that's what we're going to focus on here for 2 seconds. All right, here's the breakdown of what NVIDIA is, just like I was telling y'all. All right, it computes to the platforms and networking segments. All right, basically, it is a company ran by Jin Husong. All right, so this is a company that's based out of California. It was founded in 1993. It has over 42,000 employees. All right, the market cap is 5.39 trillion. Nvidia right now, the open price for the day was selling around $220. He said that he's looking for it to be around worth 250 to 260 probably by the end of the year. Nvidia, if you don't know, it has shot up tremendously. All right, and yes, you can see. So I'm using Robinhood honestly because this is the account where I have less money in. This is the account where I just potentially I put like $2-3 in every blue moon. I got other accounts, but my other accounts they got the money in there. I'm using Nvidia because I can care less how much money you see that I have in Robinhood. I use Robinhood because it's the easiest, I want to say, platform to use to where if you're a beginner, it will make sense with me explaining it. So it's easier for me to just show you Nvidia because, like I said, I put like my loose change in Robinhood. To be quite honest with you, my major money and my Roth IRAs set up with other companies and my S&P 500s and the brokers that I use for other stocks, like I use bigger platforms, if that makes sense, or I use like the NASDAQ. And, basically, I'm not going to get into all that. But essentially, I'm using Robinhood because it is the simpler platform to where I can explain what I need to explain. All right, so if we're looking at NVIDIA, all right, we talked about this in the last video. This is where NVIDIA has been trading for over a year. The reason why he's saying he is bullish on NVIDIA, because you have to understand everything is moving tech heavy. Everything's going tech heavy. All right. In the last video that I even talked about, NVIDIA now is starting to buy other companies. All right. Because now they're trying to expand. They're trying to go even broader. Right. They are literally trying to build something serious. Something serious. That's all I'm going to say. NVIDIA is on its way. And I believe if you don't know anything about SanDisk, we're going to hit on SanDisk here in about 2 seconds. All right. But NVIDIA, all right, they're leading in the AI tech software. NVIDIA, history says that this stock is going to continue to rise, and it will. If you're looking at the market, it has been last year around this time, it was trading for about $176. This year, it topped out at about $235. Right now, it's selling for about $219. All right. NVIDIA is one of them stocks, and the reason why he said he is bullish on there because it's a stock that has a great CEO. It has a great trajectory. There we go. Trajectory for the future. All right. Now, with that being said, let's get back to the video and let's hear more about why he was so bullish and some other companies. Hold on. Because clearly they don't want me to be great today. All right, let's get into it.
Plus in the 250 to 260 mark by the end of the year. That's my outlook for it. And that's conservatively. Would it surprise me if it gets to 270, 280? It wouldn't. But conservatively, I see it finishing the year at 250. And so if that pulls, that means compute pulls. That means Micron will pull as well. So I already said last week, Micron is one of my stories of the year. We touched 1,200, 1,300. I think 1,400 is not a space that was surprising by the end of the year of it for it. I think SanDisk will be in that 2,200 range. Those all-time highs that we touched, I think we'll revisit those probably before the end of the year. And in some of these cases, we'll pass it. Same thing with Western Digital. I know 780 or 790 was its all-time high. It's sitting now down in the 580s. So this retracement that we saw in July, a lot of people were like, when should I invest? When is it going to be a good time? We saw some of these companies pull back 30, 40, 50%. What did we do? That'll be the key teller of how we end our year.
So he's talking about pullback. So what a pullback is when a company is selling at, say, a high of 235, right? They're selling at a high of 235. What a pullback means that in the market, they are losing its trajectory, and it's a pullback of maybe 30 to 50%, maybe because they lose that value and they're having people potentially who just got into it for a quick buck or maybe some day traders. They just got in, they got in, they bought the stock where it was, it went up a little bit or it went down a little bit, boom, they just sold and got rid of it. All right. So the pullback on NVIDIA, you can see it within the last couple of months. NVIDIA hit its peak in May this year, earlier this year, 235. Right now, it's at 219. A lot of stocks for the past maybe week or two have been down, right? These stocks have been down for a reason. The stocks are down because at the end of the day, it's a lot going on in our economy here in America, right? But with NVIDIA and him being so bullish on NVIDIA, I believe, is going to take off like SanDisk did. If you don't know anything about SanDisk, well, let me just tell you a little bit about SanDisk. SanDisk was one of the stocks, right? SanDisk is one of the stocks that we really talked about that we were, I want to say, we talked about it during Stock Wednesday, but we talked about it because we were really bullish on it, just like he said. SanDisk is one of those corporations where this time around last year, SanDisk was only operating and it was only selling for about, I want to say, what, maybe $100. SanDisk, I believe, is going to take off just like NVIDIA did. SanDisk, here, let me show you an example. So if you don't know anything about SanDisk, all right, before I go ahead and get into it, it's basically a USB flash drive. It deals with USB flash drives, memory cards, solid state drivers, and it's based out of California. And this was a company that if I show you, you're gonna be like, hold on, they was how much last year? Yeah, you missed out on a little bit of money. Let's talk about it. So SanDisk, last year in August, SanDisk was selling for around $40, y'all. SanDisk was selling for only $40. Basically, that's a nice little pizza from Pizza Hut, right? $40 SanDisk was selling at. In the last year, SanDisk has peaked at $2,335. That's over a 5,000% increase in 1 year. I believe that just like SanDisk, you see where it's operating at, you see where it's selling at. I believe that NVIDIA will have one of these spurts. Not maybe as great, but it's going to be a slow trajectory and a slow turnover. The reason why SanDisk took off like this, we're going to get into why. I'm not going to dive into it all right now, but if you don't know about SanDisk, I highly advise you to dive into SanDisk. Like I said, SanDisk, if you don't know what it is, here, I'll go ahead. Let me scroll down a little bit so that way you can understand what SanDisk is. All right, so SanDisk, talking about the company and what it is. SanDisk, it engages in the development and the manufacturers, the provision of storage devices, solutions based out of NAND, the flash technology. All right, basically, it includes state drives, like I said, memory cards, USB flash drives, and stuff like that. Dang, well, it seems like I know what I'm talking about just a little bit. But anyway. All right, the market cap with SanDisk is at $195.57 billion. Different. I just showed you the reason why I'm operating on here on Robinhood. Once again, I don't care if you see how much money I have in Robinhood. This is my play account. You should have a play account too. This is where all my loose change go. All right, but if I would have invested, because I was a little bit late to the party, I got in, all right, in one of my other platforms, one of my other accounts, I got in around December last year, where it was selling for about $200. Dog, it's at $2,000 right now. All right, it was at $2,000 earlier this year. Right now, it's selling for about $1,000. SanDisk is a corporation and an AI company / software that you should get into. But now, continue to talk about NVIDIA. We're going to get back into this video of my guy talking about NVIDIA and some other stocks that he is bullish in. All right, let's go ahead and get into it.
When we saw the market reset, especially in some of these subsectors that we're in, and I say subsector because obviously all semis are not created the same, all memories not created the same, and I think that's a very good indication to make. We watched SanDisk move, we watched Micron kind of struggle today, right, until it kind of closed above. Well, they're really having a fight with is high bandwidth memory going to be curtailed by what China's doing? Well, high bandwidth memory it's
hold on, yeah.
The
TSM?
Yeah, 450 will be my last week up and running. And the news from TSM something their biggest customer, but I'm a little
Last week they had a big
Hold on, yeah. I gotta find my part. I gotta find a part that we're gonna get into. But essentially, we're talking about these stocks. All right, we're talking about investing. Like I showed you with the first two videos, it ultimately comes down to where you want to put your money in. All right, what is the investment that's right for you, right? Because I can show you this real estate video here. Let's go ahead and get into it before we get back to stocks. I can show you this real estate video where this woman, she gives you the simple breakdown of how potentially you can invest in real estate. And she's going to go through 5 different ways that you can invest. Let's talk about it.
5 ways to invest in real estate for all experience levels. 1, buy your own house and live in it. 2, buy a rental property and keep it long term. 3, fix and flip residential or commercial buildings. 4, buy commercial buildings on a triple net lease. 5, invest passively into a fund or a syndication as a limited partner. 5.
Boom, she just named them off real quick. And real quick, we're going to talk about each one. And then I'm going to show you why. At the end of the day, with stocks, if you got the money to play, you can play. You can play all day long if you got the money. If you don't got the money, then you can't play. You got to pay to play, baby. In real estate, it's a few ways that you can attack real estate. And with the first one that she said, go ahead.
Ways to invest in real estate for all experience levels. 1, buy your own house and live in it.
Buy your own house and live in it. Real estate has multiple ways that you can get involved and you can eventually make money and you can build wealth for yourself. A lot of people who ultimately come to America for the American dream, you know what they do? A lot of people who come to America for specifically the American dream of buying a house and starting a family. Guess what? The first thing that they do, they buy and live in their own house. And guess what? In about 20, 30 years, say if they bought that house when maybe they just got married, right? They bought that house maybe 20 years ago when they just got married, started a family, boom, lived their best lives, had a family. You know, the kids grew up, you know, eventually went on to college. And then the parents were like, hey, do we still want to stay here or do we want to move? Maybe we wanted to go retire. Maybe we want to eventually sell this house. Well, guess what? If you bought the house maybe in, I want to say the 1990s, and you sell it maybe in 2026, 2020, when your kids are grown and, you know, in college, then guess what? You're going to probably sell that thing for about $200,000, $300,000, $400,000, depending on how much or when you got into that market value for that house. At the end of the day, when you buy and live in your own property, that is probably the simplest way that you can get into real estate. A lot of people, in my opinion, a lot of people rent. These days, a lot of people might say it's cheaper to rent. In my opinion, no. I don't believe it's cheaper to rent than buying a house and just living in it. I don't. Because at the end of the day, yes, you might say it's cheaper because maybe you don't have to pay property taxes, right? Maybe you don't have to really worry about the mortgage increasing because you're maybe not on a fixed rate, or maybe you are on a fixed rate. Because even if you're on a fixed rate, your mortgage can potentially increase because of your property taxes and because of other things. But if you buy a house and you live in it, that's an easy way that you can create wealth for yourself, and an easy way that you could potentially tap into that money down the road. Because if you bought a house, and say if you bought the house for maybe $150,000, and then you've only been living in it maybe 5-10 years, now that house that you bought at $150,000, maybe since the properties around it have continued to sell and they're continuing to maybe get better, maybe you bought it in an up and coming neighborhood, maybe that house is now worth $250,000. So now essentially you have $100,000 in equity that you can potentially either tap into to maybe fix up some more things on your house. You can tap into to potentially buy another property, right? And then just rent out the property that you're in now that you originally just bought to live in. It's multiple options. I believe that in the game of real estate, and in real estate particularly, you get options when you buy real estate. Real estate opens plenty of doors for you, or it can open plenty of doors for you if you decide to go through them. That's point blank, period. Real estate is its own entity. Real estate is its own thing, right? So if you buy your house and you live in it, guess what? Even if you buy it and you live in it for 5 years, 10 years, 20 years, you're still going to have options with that house, because real estate, it increases at a 3.5% to 4% value every single year. Yes, you say that's maybe not a lot, because compared to stocks, right? Compared to stocks increase at a 7.8%, damn near almost 10%. But stocks usually increase about a 7 to 8% every single year, compared to real estate increasing at a 3.4% every single year. But I believe in real estate, that's how you can grow wealth. You can also grow wealth in stocks. Yes, that is possible. I believe so. But at the end of the day, real estate, it gives you options. So that's talking about the first option that she said. Now let's get into the second one.
2, buy a rental property. and keep it long term.
That's another one. So instead of buying a rental property or buying a house and living in it, you can buy a rental property from someone. Potentially they're selling it because maybe they just need the money. Potentially they can be selling it because, hey, they just don't want to put any more money into the house, right? They no longer want the investment, right? But you buy that rental property, you're buying it because you're buying in a good area. You're buying that property because that property can potentially give you cash flow. The number one thing that you have to understand about real estate, you should buy real estate to increase your cash flow, right? So you have your 9 to 5, you have the job, whether you're a doctor, a teacher, maybe you're a security guard, maybe you're a correctional officer, wherever it is, whatever your job is, right? That is your one job. But potentially, if you can have another income or something that gives you cash flow and positive cash flow at that, right? Because say if I bought a rental property and I bought that property, here, let's do this. I'll write it down for you. I bought that rental property and the mortgage is about $1,500 a month, right? So if my mortgage for my rental property is $1,500 a month, right? But I rent it out for $2,000. Guess what? How much cash flow is that for me? That's $500 worth of cash flow. That's $500 that I'm now getting because I bought this property and I'm renting it out, right? So that's positive cash flow potentially from that house. Potentially also, whether if you're actually, I'm not gonna get into that. I'm gonna get into that in 2 seconds. All right. But with buying a rental property and keeping it long term, that is essential and that is key because that's how you can create longer cash flow for yourself. All right. Because you're buying that property with the mindset that, hey, this property is eventually going to make me money. This property, I'm going to put somebody in there and I won't live in it, but that property will potentially pay off itself because I'm putting somebody in there in this house so that way they can pay off my property themselves. Right? When I buy a rental property, if I'm knowing I'm going to purchase this property specifically for it to be a rental, guess what? I'm going to put somebody in there who I know is going to pay on time and who I know is going to give me cash flow for that property. And that's going to pay that mortgage themselves. I don't want to pay a mortgage if I'm buying a rental property. You know what? I'm going to put somebody in there and I'm going to have them pay that mortgage for me. And then in a couple of years, I'm going to look up and think, damn, that house almost paid off 5-10 years down the road, maybe 15, maybe, 20. However long you decide to rent it out, however long you decide to keep that rental property. Next.
3, fix and flip, residential or commercial buildings.
So this is another thing, right? With stocks, you can make a lot of money potentially if you maybe day traded. But like I told you, stocks is a long-term investment. Real estate can be a long-term investment. But with real estate, you got to look at this. Real estate, if you buy it as a fix and flip, right? You buy a house, maybe you got it for a cheap price, $100,000, foreclosed, right? You have to then put $75,000 into it. So I bought this house. Here, let's do this. All right. I don't know why I didn't have my board over here. I knew I was going to need my board today, but it's okay. All right. If I buy a house for $100,000, I got to then maybe fix up the bathroom, maybe put some new flooring down. I got to potentially fix up the windows or get a roof done. All that. I put $75,000 worth of work in there. Right. And I bought it for $100,000. Now, when I put it to go get appraised, the house then maybe appreciates or appraises for $250,000, maybe $300,000. I just basically created me a nice little funnel of cash. Maybe I made 20, well, not even 20 in that scenario. It's about 50,000 or more that I made from that property. So fix it and flip it, commercial units, hey, I do it all day long. It's perfect. If you want that consistent cash flow, if you're able to potentially take out a loan from the bank and then you plan on paying that loan back ASAP. So fixing and flipping properties, if you can find a foreclosed home for maybe $100,000, $80,000, however much, right? Fixing and flipping, guess what? That brings you consistent cash flow. Because if you do that 1, 2, 3, 4, 5 times in a year, that is consistent cash flow that you're getting, right? If I bought this house for $87,000, I literally two doors down from one of my properties. 2 doors down from one of my properties, somebody bought the property for $87,000. Guess how much that property is now going to sell for? $300,000. You bought it for $87,000. Maybe you put in maybe less than $100,000 of work. Even if you put in say $75,000, you still dang near have potentially $100,000 profit. Potentially. So it all comes down to where you want to put your money and how you want your investments to grow. And are you willing to put in the work? Because if you're doing a fixing and flipping property, do you know a contractor? Do you know a plumber? Do you know an electrician? Do you know somebody who's very experienced and somebody that you can trust to help you fix up this property and get it back on the market really quick? So that way you can potentially cash in on that investment that you made. Next.
4, buy commercial buildings on a triple net lease. 5,
4, buy commercial residencies or commercial building. Yes. Oh, actually, hold on, my bad.
fix and flip residential or
So fix and flip residential or
commercial buildings. 4, buy commercial buildings
on a triple net lease. So this one is a little bit more difficult. All right. It's possible that you can do it on your own, but this one, all right, if I'm buying a commercial building on a triple net lease. So a commercial building on a triple net lease, that means I buy this one building, right? And this one building, it has 1, 2, 3 office spaces potentially in that one building. That's a triple net lease because I'm not only gonna give one lease to this person, I'm gonna have a nail salon right here, I'm gonna have a barber shop right here, and potentially I'm gonna have maybe a candy store in the other one, right? That's a commercial building with a triple net lease because not only are you having the whole building essentially get paid for by itself, now you're putting different companies within that building. You're putting a company like a nail salon or a beauty parlor in one of the units, right? You're putting another company like a barbershop or whatever you want to put in it in the second one. Then you're putting something in the third one. This is buying a commercial building. So a building where you can see suites and you see different things within it. You see different offices. All right. This is a great, great thing because if you put a business in that commercial unit, that money is just going to ring in every month, especially if you put a consistent if you put a consistent money maker, right? Say if you put a Chipotle in one of your business or one of your buildings, or you put a goddamn fried coop, you put a goddamn Waffle House on one side. Whatever you do with commercial units, you want to get a business that will thrive and that will be a long-standing business to stay in that unit or that property, right? Because you got to understand, in a commercial building, if 2 people move out, you still got one person paying for you if you do a triple lease. If you have 2 people or one person move out, you still got 2 people paying you. If everybody moves out, then you're stuck with paying that building for yourself. So that's why if you buy a commercial building, understand that you have to make sure that you potentially have even some companies lined up before you even buy that commercial unit or that triple lease. Or you have that in your mind that you're going to do a triple lease, my bad. But you got to have that in mind when you buy a commercial unit. Because if you buy that commercial unit, you got to understand what companies and what kind of business that you want to run out of that commercial unit. Do you just want maybe a building where you have lawyers, you have doctors, and maybe you have a dentist operating out of there? Those are consistent businesses that you know are going to produce cash flow, and you know they're going to be able to pay you every single month on time for renting out your space. You're giving all of them subleases, right? You give them that triple net lease because you have 3 businesses operating out of that same space. All right. I know I'm kind of going into depth breaking each one of these down, but I'm doing it for a reason.
on a triple net lease. 5, invest passively into a fund or a syndication.
So this one is also key because potentially, say if I know somebody that buys and flips houses, or I know somebody that potentially is trying to buy a apartment complex, right? Say if this person is trying to buy an apartment complex, and I know at the end of the day, you know what? I know they're going to make some money off that apartment complex. So let's do a syndication or limited partnership. All right. I'm going to give you, say, how much money do you need for that apartment, my good sir? Oh, you need 50,000. Oh, you just need 50,000. Then, hey, I'm going to put my 50,000 in there. And then I want to sign a contract with you for about 5 to 10 years. Right. So anything that needs to be fixed, I'll put another 20,000. And you can have not only me, you can get another partner who puts 50,000 and then potentially adds another 20,000 to get things fixed as long as you guys hold on to that property and it's within that contract. So this is a great option potentially if you know people who are willing to get into real estate and you know people who are serious about real estate and you know people who do this on the regular basis. Because if you do this on a regular basis, if you invest in a passively into a fund or syndication with a limited partnership, That is key because now you don't have to do any of the legwork. All you're doing is just like stocks. You just putting the money in there and you just watching it go. That's it. You know what? You say you need 50,000. Here you go. Here's a check. Now listen, when that apartment complex starts making money and producing, I want my 50,000 back. But I also, hey, here's another 20,000 that I want to potentially say, hey, I want to continue to invest with you. So if we need to put that 50,000 back into the house, boom, we're going to put it back in there. But that's a syndication partnership because you're saying, hey, here's the money up front, but eventually I want my money back and then some, right? Because you also want to continue to keep that investment, depending on whatever contract you sign. Because some people, you know what? Hey, I just want to help you out. So with me helping you out, I'm going to do this syndication limited partnership. I'm going to give you 5 years to potentially pay me back the money, the 50,000 that I gave you. And I want interest on top of that. It's different ways that you can sign that contract. But I'm saying all this to tell y'all that with real estate in particular, it gives you flexibility to do all these different things. With the stock market, guess what? You got to put your money in there and then you just got to sit and hopefully it grows. So if we're looking at the video, I bought in August and I'm just sitting, just watching it grow. This is how it's been going up in the year. The stock market goes like this all the time. But with the stock market, like I told you, the stock market, it increases every what? Every year. Every year it increases potentially 7 to 8%. It's been increasing 7 to 8% since I want to say since the Great Depression, years after the Great Depression. So for the last, I want to say since the early 1960s, maybe even earlier than that, the stock market increases every single year. It is a true fact. It increases more than real estate. But potentially, say if I bought that property in an upcoming neighborhood, maybe this value in this property, they building malls, they're building shopping centers around this property. And guess what? That's driving my property value up. So potentially I could have got 3.4% back, but since that house sold, they're building this supermarket over here, this supermarket over here. That's skyrocketing the property value over this in this neighborhood. So instead of my house appreciating or my property appreciating at just 3.4%, because all these things are happening, I bought this property in a great upcoming neighborhood. Instead of that 3.4% or 3.424%, now it's increased to 10, maybe 15%, right? So real estate has that potential. But with both options, guys, the number one thing that I want you to get through your head and I want you to understand, whether you invest in real estate, whether you invest in stocks in the stock market, both of these are long-term investments. You just have to make the decision that's best for you. I just broke down the 5 different ways that you can potentially make money in real estate. And believe it or not, it is some other ways that you can make money in real estate as well. But with me breaking that down, you have to understand whether you're getting into the stock market, you got to understand it's a long-term play. You ain't going to make that money overnight, my guy. You're not. I'm just saying, you're not going to make that money overnight. All right. With the stock market, you got to understand, you put that money in there, just sit back and watch it grow. Sit back and watch it grow. You invest your money in real estate. Unless you're doing fix it and flip it. If you're doing a fix it and flip it, you buy that house for $100,000, you bet your butt, hey, you put $75,000 in it, right? So now you're in $175,000 potentially, right? You bought it for $100, you put $75 into it, but now it appreciates for about $300,000. What's your net proceeds? What's your profit, right? So if you're doing fix it and flip it, it's a different way that you got to look at things, right? But if you're not, then it's like, okay, with the stock market, maybe I'm just the kind of person to where, hey, I got the money. I just wanted to grow in about 5-10 years. I don't want to do nothing. I don't want to think. Here go then you go with a broker. Have your broker go ahead and put your money in the right places. Period. Get a Roth IRA, get a 401k, match that little percentage, or say if you can find a company or you find, an employer, right, who matches 3% to your Roth IRA, whatever, right? With that being said, you have to then decide what is best for you in your investment. How do you want to grow your wealth? In my opinion, I believe real estate is like gold. I believe real estate is going to continue to appreciate and the value is just going to continue to go up. So what's my take on trading stocks? A lot of it is a scam. Yeah, I mean, my bad. I was reading the comments chat. I just lost my train of thought. But with stocks, I believe, some of it is a scam, potentially. But stocks, traditionally, they go up 7 to 8% a year. So in my opinion, I do both. I'm the kind of person that when I invest in stocks, I'm just putting my money in there because, hey, in about 5-10 years, I want to just see that money grow. I do. I want to look up in about 20 years and be like, dang, that stock, I bought that stock when it was on like around $50. Now I got about 100 shares. Now that stock worth $150, maybe 200, 300. That's what I want to see. And I just want to have that money just grow steadily. But in real estate, you got to pay to play, baby. You got to pay to play. You got to be ready to make some moves when you invest in real estate. You got to be ready to really, hey, at the end of the day, you gotta spend money to make money. What are you doing? Fixing and flip it? Whether you're buying the house just as a rental property, right? And if you're buying it just as a rental property or a rental unit, then you got to understand with buying that property as just a rental property or just a rental unit, man, it comes down to that property being your moneymaker long term. You're invested in that property because you see the growth in that property, whether you're buying it for a rental, whether you're buying it for yourself. Real estate is like gold. It's going to continue to increase every single year. All you have to do, just make sure you keep the upkeep on that property, and then you will see a positive return eventually on that property. I promise you. My aunt, she bought a house. She got a few cribs. One of the houses she bought maybe 10 years ago for 100-some thousand. Now that bad boy worth about 2, almost 3. My first property that I bought, right? I got it for like maybe 100-some thousand, right? Maybe around 150, maybe a little less. That property is now worth for dang near 300,000 plus. And that was my first property that I bought. So my first property, guess what? I automatically see an increase because the neighborhood that I bought it in, up and coming, right off the expressway. Perfect location. The neighborhood's on the rise. The neighborhood is a good neighborhood, right? Other people are starting to sell their houses. So guess what? That's increasing my property value. Other people are taking care of their houses. So guess what? That's continuing to increase my property value over there, right? So with that being said, you got to understand is where do you want to see your money grow the most? In real estate, and you're going to see it grow however you want it to grow. You're doing fixing and flipping, you're going to see it grow like that. Couple months, hey, you're bad in maybe you're bad in January, maybe you're flipping it by the summertime, right? So really it comes down to you. What do you want for your money? Where do you want to put your money, right? Stocks is one thing, real estate is another. So you got to break it down for yourself. And to be quite honest with you, I was going to get into more. I want to say more, just talk about just the real breakdown of some stocks that I've been investing in. But I'm going to save that for next week because today I just wanted to kind of put that in y'all heads to where it's up to you whether you want to invest in the stock market or you want to invest in real estate. I showed you 2 different perspectives about investing in real estate and how people feel about real estate and investing in the stock market. Some people say the stock market is a sham, is a scam. To be quite honest with you, the stock market ain't been no bigger scam than it is now with our president that we got in there. Because every other day he's manipulating the markets and telling his partners and his buddies when they should pull out, when they should put in. So yes, the stock market, you can look at it as a scam. I wouldn't blame you. But you know something that I treat like gold? Real estate is like gold. I know from experience. I know that my first property, like I was just saying, I bought it for around 150-some thousand. The property next to me sold for more than what I bought my house for, and it's smaller than my house. The property 2 doors from me was a foreclosed home. The guy bought it for $87,000. $87,000. Then he sat on it maybe for a year. Then he fixed it up. Now that property is going for dang here 300-some thousand plus. Me personally, my first property, bought it for 150, around there. Now it's worth 300-some thousand. With me, long-term investment. I want to see my money grow. Real estate is like gold. It's going to continue to appreciate in value. Real estate, at the bare minimum, I'm going to keep saying this. Real estate increases at a 3.4% to maybe 4% or even more, depending on the kind of neighborhood that you bought it in, depending on what's going around in the surrounding neighborhoods. For me, my number one goal, I eventually want to own apartment complexes. I believe apartment complexes, hey, guess what? With them, say if I buy a multifamily, let's just not even apartment complex, multifamily. Multifamily is a duplex. One side over here, one side over here. This side, Guess what? I lived in it for about a year. This side, as soon as I bought it, I rented it out, right? I started paying myself, putting my money, right? Putting my money into the bank, acting like I'm paying rent, even though I'm not, because the person that I moved in this side, he's paying the whole mortgage because of what I'm charging him. Now, not only am I paying my mortgage, that's not really there, he's paying his mortgage. Now I'm paying the house and my property off even quicker, even sooner, even faster, right? These are different things that you can potentially do. And I know I'm a little bit everywhere. Next time I'm going to have my board. All right, next time we're going to really get into it. But I know I've been saying we're going to have Stock Wednesday, Stock Thursday. And I just wanted to hop on here and have a quick conversation with y'all about it. All right. So with that being said, I know from experience about real estate because I invested in it. I see it with my own eyes, what it's done. All right. This is one of my studios right here and one of the cribs I got. Guess what? It's being paid off for by itself. Renting out the upstairs. Now I'm in the basement. Right? So this is mine. The next one. I live in that one full time. Renting out one side. Staying in the other. Come on, baby. What is your goal? What is your plan? What is your long-term goal that you want to get to? Me, I'm using all these rental properties that I have to eventually, I want to tap into the equity on this one, tap into the equity on this one, tap into the equity on this one. And then I'm going to get that apartment complex that I really want. Because with that apartment complex, say if I got eight doors in there, right? 8 doors. Maybe out of those 8 doors, right? Maybe 2 people move out. I still got 6 doors paying me. With those 2 doors that those people moved out, I'm going to fix it up, fix up the floor a little bit. Maybe, put a new some stainless steel appliances in there. And then I'm going to get that sucker rented back out. Say this time, after a couple of years, maybe 3 people move out. I still got 5 people paying for that building, on that building. So with an apartment complex, the money is always coming in. It's always residual. And say if those people move out, I'm going to put a new floor in, put a new laminate floor in, fix up the door, do this, do that, fix it up new, and then I'm going to get those people back in there. Say this time, instead of just out of those 8 people, say if everybody move out, say if I only got 4 tenants left. All right, 4 just moved out. Guess what? I'm going to do rinse and repeat, do that same process because I still got 4 doors paying me. So yes, if I got to compensate a little bit more, if I got to pay a little bit more, that is fine. But that's the thing. In real estate, depending on how you want to attack it, I believe it is more of cash flow depending on if you do it the right way. If you want to see cash flow in real estate, you can see cash flow in real estate. Where did you buy that property at? What was the location? What's the surrounding neighborhoods going for? What's the value in it when you bought it? And what's the value or the projection in about 5 to 10 years? Can you see it continue to go up, or is it at a stalemate? It's not going to go up maybe in the next 5 years. It's up to you to do your research, do your homework, and figure out what's best for you. If you don't want to work with a realtor, you don't want to work with a real estate agent, don't. Maybe you just want to get, you know what? I got all this money. I just want to, give it to somebody. Hey, put my money in a mutual fund. Put my money in NVIDIA, buy me some SanDisk, buy me some Microsoft, right? And hey, just let that be it. You just want to see your money just grow. That is fine. Maybe you want to get into real estate, but maybe you just want to fix it and flip it. I just gave you an example. Bought the house for $87,000. Put in $50,000. House appreciated for damn near $300,000. Over $100,000 profit. Up to you on how you see it. You have to decide for yourself whether you want the short-term money, the quick money, or whether you want the long-term money. When I invest in the stock market, I know it's long-term. When I invest in real estate, I know it's long-term. But in real estate, you can make it short-term, fix it and flip it. In stocks, you can make it short-term, do day trading, depending on how much money you got to play with. So it's up to you. Pick the lane that's best for you and best for your pockets. Today, I was going to go a little bit more into stocks, a little bit more into what I think you should be in and things like that. But we're going to say that for the actual Stock Wednesday next week. Next Wednesday, I will be breaking down the stocks that I'm bullish on, breaking down some sleeper stocks and some other stocks that I believe that you should invest in. All right. So we're going to get into it all. All right. Real quick, though, since we're talking about stocks. I want to get it. I want to show y'all the rest of this video because he's going to talk about a few sleeper stocks that I believe that you should invest in. All right. And then we're going to close out. I talked a ton about real estate in this video. All right. We're going to close out with talking about stocks. And then that's going to be it. All right. I just wanted to give y'all a little bit of that real estate and wealth talk. That's it. That's all. But at the end of the day, lean onto your own understanding. Do your research and figure out what's best for you in your financial situation. But in my opinion, you should do both. Invest in a little bit of money in stocks, and if you can, invest in real estate. Real estate is like gold, in my opinion. I won't ever not say that. Hold on. There we go.
Over the past week, but I think Microsoft is still one of my most underrated stocks. I think people don't really understand.
Why you say that, my guy?
The sources of revenue that they have, the infrastructure that they have, how well the companies run, the management that's running the company, the CEO is phenomenal. Yes, it has been beaten up, and we covered it. It's traded kind of sideways for 2 years, and now it's having a decent moment. But I still think the fact that they have the Copilot right now, we're talking about enterprise software that leaves the door open for enterprise agents. The fact that the cloud business is growing, they're showing that we can have a CapEx that is pretty high, but we're spending it because the expected revenue in the future is going to be exponential. And so looking at the level that it's at, like I said, it's had a 1% move over the year. I still think there's so much growth. I still think it's being underestimated. It's kind of unfairly been put in the software category. We're seeing a breakout now, but I think the run it's primed for a nice run to the end of the year. It would be one of my most underrated because of the position that it has in terms of market cap, all the things that it has going in its favor, the momentum that it's carrying right now. I think it would be in my top two for sure.
Well, who do you guys think is the most underrated stock? Put in chat.
So he was saying that Microsoft is probably the most underrated stock right now. Microsoft, they haven't really tapped into the AI, I want to say, mega framework that every other company and every other tech company is tapping into. But right now, a lot of people would say buy Microsoft, right? Microsoft, it is a slept-on app right now because a lot of people are thinking that potentially they might have a fall off or a drop off. But Microsoft, it's a great company. It has a great CEO. It's going to continue to appreciate. It's going to continue to go up in value. Microsoft right now, at least in the past, I want to say year, right? All right, here, let's look at this. In the past year, all right, Microsoft is down 6% this year, right? But Microsoft at its peak, at its highest, it was operating and selling at $542. This year, it fell down. It fell down all the way to, I want to say, what was its lowest point? This year's lowest point was maybe 356, and this was in March. Now it's back up to 497. So him saying Microsoft is one of the most slept on, here, my bad, I didn't show y'all, but him saying Microsoft is one of the most slept on stocks that you can be in right now, I would have to agree. Microsoft is pretty slept on. Microsoft's trading for around $500. Microsoft will be around forever. Long after I'm gone, long after you're gone. It will. It's a great company, great CEO, like he said. They haven't tapped into AI yet. And you know when Microsoft really taps into that AI network like Google has, like goddamn, X has, all these other companies, SanDisk, all these other companies, all these AI companies, right? Microsoft is kind of sitting back waiting, trying to see, okay, what y'all doing over here? What y'all doing over here? Okay, we got something up our sleeve. So that's why he's saying Microsoft potentially, hey, it's a slept-on company. It's one of the most slept on. All right.
Level as like I said, it's going to be exponential. And it because that's growth. We're seeing a breakout now, but I think the run, one of my most underrated because of the position that it has in terms of market cap, all the things that it has going in its favor, the momentum that it's carrying right now. I think it would be in my top two for sure.
Well, who do you guys think is the most under stock that nobody's really talking about or people are not really paying too much attention to right now? Let me see what the audience has to say about this.
Oh, yeah, let's do it. Well, hold on. Let's talk about ServiceNow. We can do that.
All right. But anyway, we're going to leave it with Microsoft. All right. So Microsoft, You want to invest in it. All right. All this, hey, don't listen to nothing I'm saying. Do your research and figure out what you want to do with your money. All right. And how you want to potentially see the growth in your money. So at the end of the day, hey, I wanted to just give y'all something, just plant the seeds in your head for where we're about to go with this thing. All right. In the future, I will have my board right here. All right. I will be drawing out the numbers. I will be trying to make it make sense for you and me. All right. And also, I will be starting financial literacy classes. All right. Literally on here, I'm giving away free financial literacy classes for y'all. All right. Literally, I'm going to have not a PowerPoint presentation, but I'm potentially going to have some things that I pull up on a PowerPoint potentially that we're going to talk about. All right. So that way, whether it's you learning about debt and learning more about how to operate with debt, you learning more about, your credit and learning, the things that credit can do, all the glorious things that having good credit can do. You learning about, taxes. If you don't know how to do your taxes, we can talk about that. I know a little something. My mom actually has a tax business, so we can get into all that. All right. 3. All right. We're going to be talking about real estate, of course. We're going to be talking about the stock market, of course. So with me talking about these topics, all right, I'm going to try to do my best and give you the information that I believe can help you grow your finances. All right. So whether you already know the information, great. Whether you don't know information, good. Because we're going to continue to learn together, because there's some stuff that I'm still even learning. You never stop learning. You never stop growing as a person and as a human being. All right. So real quick, before we get up out of here, I need you to do me a favor. All right, hit that like button, hit that bell button. All right, show your boys some love. All right, like I said, today I wanted to keep it real broad. I wanted to keep it real simple, short, and general. All right. I wanted to just give you a few topics talking about some of these sports topics. I mean, not sports topics, talking about stocks and talking about real estate. I didn't want to hit y'all over the head a little too much because I want to give it time. I want to give it time. All right. At the end of the day, it's going to take time, dog. It's going to take time for us to continue to have this conversation. I will continue to bring you more facts. I will continue to give you more and better presentations. But the financial literacy part of this podcast or this show, the Golden Gemz Media, guess what? It's coming at you. All right, we crawling, baby. Like I told you, we starting to crawl now, but we're going to start walking eventually. So we got to start somewhere, baby. So if you tuned in, hey, I appreciate you tuning in. If you didn't, then guess what? Hey, I appreciate you anyway. But we're going to continue to talk this talk. So now, with that being said, tomorrow, we got day 9, all right, of Shador Sanders talk. All right, so make sure you tune in day 9 tomorrow, talking about training camp and what went on, the things that we need to know, and what we need to be ready to see Saturday versus, but Saturday when we watch the Cleveland Browns scrimmage. Because Saturday it's going to be a lot of scrimmage clips. It's going to be a lot of things that I hope that you are ready for, because we're going to dive and talk about it all. Saturday, expect probably a 3-hour stream. Not going to lie to you. All right. But next week, make sure you come back and you tune back in for Stock Wednesday. On Stock Wednesdays, we're going to be talking about real estate. And if we're talking about something else, I will put that in the title. But anyway, appreciate you in advance. Hit that like button. Hit that bell button. I will promise you this. Hey, I will only continue to give you better and better content. We're crawling right now. Like I said, we're going to be walking. And then after we start walking, we're going to start running. For real, for real. So, hey, I appreciate you in advance. Make sure you send this to your mama, your daddy, your best friend of another friend, Lil Johnny, Lil Timmy, and don't forget Lil Susie too. Send this to everybody. And I mean everybody. Send this to everybody that you know, because I greatly appreciate it, and it helps me. All right? So, hey, I appreciate you. I love you. Make sure you send this to your mama, your daddy, your best friend, and Lil Susie, Lil Johnny, everybody. Everybody. Don't forget Lil Josh, who just moved across the street from Lil Susie too. All right? He needs these gems too. Don't be keeping all these gems to yourself. All right? I appreciate you, baby. I love you. And with that being said, guess what? We out. Deuces. Come back for more, because we only getting warmed up. Yeah.
Hey, we live now, really.